Hello everybody, welcome back. Let's have a look at some of these coins. We'll look at the top three. We're also going to have a quick look at Ocean Protocol. And before I go any further, please like and subscribe. I've also got a Telegram chat which you might want to join into. It's a really good community in there. A lot of people with a lot of different creative trade ideas. A lot of us trading the trading bots as well at the moment, and most of us are killing it. So like I say, join in. All the links are at the bottom, and let's get started then, shall we? So Bitcoin kind of doing pretty much what we expected. We're consolidating is what it is. We're not dumping, we're not crashing, we're consolidating, and that's what we want, that's what we were looking for, and that's what's happening. Is it going to continue? In my personal opinion, yes, it is going to continue. This is what we're kind of looking for. Now at the moment you can see now that the buys are getting weaker. Essentially the buybacks, you know, the dips, the BTFDs that you hear about, they're not really taking place as much as they used to. What people are looking for now, the experienced traders or the people who've been in the game for a little while, they're not just going crazy buying like like a lot of people have been recently. I would imagine that a lot of the people who've been buying through PayPal and looking at Twitter and this, that and the other, they basically run out of money to buy dips and they're stuck in these positions. But I wouldn't worry so much because, like I said, this isn't a dump, it's not a crash. This is consolidation. You want to see what consolidation really looks like? That's a consolidation. That's a nasty one. See this one? That's a nasty one. I mean, this one, we're not going to count, the March incident, but that one was a 52% retrace. This one, well, brace yourself, is a 84% retracement. That's consolidation. Now, this is a different situation, clearly. We are in a bull market, and we're in the last 12 months of a bull market, so I would not expect to see much more than around about another 30% retracement from here. But I am kind of hoping that we do, because it would allow us at that point to buy the dip. We buy at those levels. You buy at appropriate levels. You don't just buy because it's gone down. You buy at supports, and you study the market. So what have we worked out so far? Well, what we've now come to realise is that yes, we've broken down beneath the 10 exponential. We've also broken down beneath the 20 simple moving average, and now the 20 simple, the 10 exponential and the 20 are crossing. So this is looking like there's more momentum picking up to carry on with this downtrend. Now, if we go to other time frames, an interesting one to look at would be the 3-day. The 3-day also has its own 10 exponential, clearly, where it was like a last stand of resistance here, or should I say support. So we basically dumped down into it and bounced straight back up for a bit. Now what's happened is we're having a continuation of that move down, and it looks as though it's kind of wanting to break down. If that breaks down, then we do have the 20 simple at basically 16,000 at this very moment in time. That would definitely, in my opinion, be an area to buy the dip. Would you buy it and hope for a reversal? I probably wouldn't hope for a reversal at that point. I would expect for a decent bounce at that level, and then a continuation down, maybe even to around 14,000 or 13,000. There's a few reasons for that. If we go to the daily again, the 13,000 zone corresponds to this, which is the super trend line that comes in from 2017, where it's resistance, support, resistance, support, resistance, support. When you're above it, you're essentially in a bull market. When you're beneath it, you're in a bear market. It's kind of simple as that, really. Now, because we've got 12 months, 13 months, give or take, of another bull cycle, I would expect that would be the final resting place for the price action if it were to come down that far. And if there ever was a place to go long, that would definitely be it. If it broke down beneath there, you could probably consider this whole thing a failed cycle. So I don't think that's going to happen. Bitcoin's never failed a cycle since it came onto the market. What was that? 11 years ago. So what we're going to do from here, where we're going to go from here. First level of super support, I would say, would be this line here, also coming in at the top of this blue box zone, but it's basically 17,150. If we get down to there, you could buy that one, you could go along on that one. I mean, I'm not your financial advisor, this isn't financial advice, but I would be considering going in on that one as well for a cheeky little long, see how that one plays out. I do not expect that at that point to become a reversal. Now, what we could also look at here would be what could be seen as a giant triangular formation take place. we could essentially play a range within here. This could be an interesting place to go long and short within this triangle formation until it decides to break out. Now, if we don't break down from it sooner rather than later, I would expect this to break down first of all, to be honest with you, and then that would have a stronger continuation of the move down. Then we would be looking at these sort of areas as potential target zones. But for the moment, I would be quite happy to play this range, which doesn't look much, but it is actually quite a range from top to bottom. It's a 10% move, decreasing every day, but longs and shorts to be played within this wedge, this triangle wedge, basically. That's Bitcoin there, and we've already looked at the 3-day. Let's have a look at the weekly to see if there's any confluence with any of these zones. So let's have a look at the 10 exponential, 16,000 again, 16,000 10 exponential. That corresponds to the targets we saw in the lower term time frames. And if we go to the 4 hourly, let's have a look at this one. So this is an important one at this very moment in time, because what we're seeing now is these moving averages clearly all facing down, this kind of spiraling down. What would happen if we broke down beneath this moving average here? This is the 200 exponential and the 4 hourly. If we go below here, then it runs the risk, if we stay below there, it runs the risk of something called a death cross taking place, which is when this green 50 exponential crosses over this white one. Now obviously we're going to have these on the smaller term time frames. They don't really count for a great deal, so a fresh one just took place on the 2 hourly, and obviously we're going to have them on the smaller term time frames. But the 4 hourly generally does count for a lot more than the others. The others are signals into themselves, but basically the 4 hourly is a signal to be played, really. Once that takes place, I'm not saying play that actual cross. That's generally not how a death cross means. What it generally means is a confirmation of a further downtrend, maybe by 15 to perhaps maybe about 30% down from that move. So let's measure that from where that is right now, because it's not going to go much higher than that. A 30% retracement would actually take us down beneath the $13,000 zone. But a 25% retracement from breaking down from there, having a confirmed death cross. 25%, yeah, that sounds about right. Sounds about right to me. And again, this doesn't mean it'll happen in a big dump. This means that what we're doing now is I was saying this on my previous videos this last over this week. We're looking to play resistances, short from resistances rather than long from supports. That's kind of what we're doing. Now you can play both sides of that if you have the time, but essentially the bigger moves for me have been and continue to be the shorts. So I've been shorting this like crazy on Bityard, and I've been doing very well out of it, shorting from the resistances, not longing from the supports, because at the moment what's happening is, like I say, we are seeing a crossover. We've got our death crosses here, we've got our death crosses here, we've got our supports being broken on significant time frames like dailies. So the momentum is down, which means that the chances of us breaking above here is less now, because previously all of these levels have been support. Now they're going to be resistance, especially because they're facing down quite steeply. So that is the name of the game now, short from resistance, not so much longing from supports. We long from supports when the sentiment kind of changes, and at the moment it looks like the momentum is down. Now I'm not saying that this is going to all play out the way I'm telling you it is, but so far my plan has worked out quite well, and I would expect it to continue this way over the next few weeks. Now we're going to have big bounces, trust me, we will. So longs and buybacks will be rewarded for those who dare to do it. But personally, I'm looking to play this triangle range. I think this is what's most likely to play out at the moment. It's descending level of resistance and a flat level of support. So in my book, the chances of us breaking down out of a formation like this is more likely to be to the down than it would be to the up, because of our moving averages. So this will correspond to all these other assets. So we look at Ethereum, we've basically got the same deal taking place. We'll be holding, I imagine, pretty much, on that 200 exponential on the 4 hourly. Bulls really want to hold this, they need to keep this. If we break down beneath this, we run the risk of that death cross. Let's have a look at XRP. Let's see what XRP wants to do. I imagine it's going to be similar. It's stronger, it's definitely stronger. This will be likely a lot to do with the fact that there's the Spark airdrop and people holding on to this token longer than they should have done. They should have got out back here when we kind of said that this was the top, didn't we, on this channel? We said that this is the top. We said this is the top. I mean, the thing is that we've got mixed signals on this because of the people holding on to for dear life. We've got a golden cross on the 3 hourly. That's bullish. This could be a one giant bull flag. These buybacks are significant. Look at the size of these wicks on the 3-day. There's a lot of buying pressure still, and again we're holding above major moving averages on the 3-day, but on the daily time frame it's a slightly different story. We've just recently broken down beneath the 10 exponential, the center of the Bollinger Band, and now we're looking to probably come down to these levels, so 44 and ultimately into the 30s, I would say. So XRP, as strong as it is, and it certainly is strong, it's going to give it up when Bitcoin gives it up, if Bitcoin gives it up. Anyway, let's have a look at our new favourite friend, the Ocean Protocol, which looks horrendous. It's terrible. It's really, really bad. But it's also good because it's coming down to these zones, which I would consider to be the buyback zones. So, 35, definitely an opportunity to buy. Don't expect that to hold if Bitcoin continues to go down, because this chart looks worse than all others in every way. But that's fine, because if you want to make money in this market and you're confident in a project or a coin or a chart overall, then the best time to be buying is when everybody is selling. So buying, the blood is what we say, basically. I'm speaking to you like you don't know anything. I'm sure a lot of you know exactly what I'm talking about. So the idea is, when everybody's selling it off and the chart looks bearish and you think that it's going to zero, if you're confident in that project, if you're confident in that stock, if you see value in that commodity, then you buy it, don't you? And you wait for it. So this is my plan for Ocean Protocol. I think this one's got probably the brightest future out of all these three that we've looked at here. And this is my plan. Buying in these zones that are basically 3330. That's where I'll be buying at. My first level, and my low levels will be basically 29 or 30. And if that, for whatever reason, breaks, I will have some left over to buy at 25, which is back down, and it's pretty much a full retracement from where it went. If it breaks down from there, I'll be relatively sad, and I'll probably never speak of Ocean again. But to be honest with you, I don't think that will be the case. We're waiting for this one to play out, because on a longer term time frame, this token here has a finished roadmap. It's ready to go. All right, it's just waiting to be adopted, and when it does finally find its adoption, it will pick up pace like no tomorrow. The value of these tokens, because their use case is a real use case, it's not just a silly old utility token. It does actually have a decent use case and an opportunity to basically infiltrate the data market, which is multi-billion-dollar industry waiting to be tapped into, and I'm pretty confident that they have the ability to do that. And that's why I'll be looking to buy this blood. Now, top targets, I don't really have those, don't really have them at all, but I would be certainly looking for, over a 12-month period, especially buying down at these levels, a 10 to a 20x. So that's my expectation, and I would say that that's reasonably conservative. It could do a lot more than that, because the market cap that it's looking to tap into is so big. So I'm very, very excited to see this one dying off in the short term. That's fine by me. So let's have a look at some of these other things. So this is something that we like to look at, right? It shows us a general idea of what's going on in the retail market. I know that the CME futures are still net short, and that's something, one of the indicators that we were talking about on this channel, saying if they're net short, that's something to be aware of, something to be a little bit concerned of if you're holding at these high levels, or if you're looking to long. You're betting against the big boys at that point. This is the retailers, and the retailers are still holding around 65%, almost 66% long, and that is just on the edge of where I often see a tipping point. When longs decrease below 66, I often find that that's the tipping point, and then things really start to gain momentum on the move down. Now, if they start to go above 66 and especially up to 70, then buybacks are strong, and you could definitely buy back and go long on those, and expect to have a reasonable return. Obviously, you'll be late to the party because people are doing it before you. And again, this isn't a major indicator. It's just a bit of an idea about what everybody else is generally doing. This isn't a be-all and end-all. It's just one of many little clues as to which direction it's going to go. At the moment, we're just below 66, so we're still on that, in that middle ground for me. I know that that's net long, but technically, this is a little bit skew with, because Bitfinex is basically always up in the 80s, has been pretty much all year. So I have to take these figures with a pinch of salt, really. These two, they don't take up a great deal of money, but still, I often say that 66 is the tipping point. So we're below 66, which is middle ground at this moment. So I probably would expect to see a little bit of buyback at this moment in time, and then again short from the resistance is what I'll be looking to do. And the resistance being on Bitcoin, if we were able to get up to these levels again, up into this blue box, we're talking about 18,400 or 18,500. But now I think that the 4 hourly is going to be more of an area to be playing, and I'll be looking to 18,000 flat, 18,250. I don't think we'll be seeing areas above there, and if we did go above there, then yeah, we'll be talking to another few $100s. To be honest with you, every 4 hours that go by, this is just going to get weaker and weaker and weaker unless we get these buybacks. I think the majority of the move has played out today, in all fairness. Let's have a look at the Dixie chart. So this is another component to this whole move as well. Dixie on the monthly, now I've shown you this before, supported on this 200 exponential. So this is the last time Bitcoin was at its all-time high in January 2018. So if you remember what happened in 2018, you don't need to remember, I'll show you. This is what happened. Whoa! The death slide happened in 2018, and the Dixie had just finished its death slide and bounced from this 200 exponential. So I'm not expecting this kind of move from the Dixie at the moment. We didn't have a pandemic back then. We didn't have the Fed creating dollars like no tomorrow. So it's a completely different kind of setup. And given the way that this has moved over the last couple of years, it's formed a lower high, which tells me that this is technically in a consolidation of its own from this move. So up here, down, up, higher point here, down, and then down here. I think we're going to come down lower than these zones. We might even have end up having a full retrace back down here, which is going to be positive for the long run for Bitcoin. But for the moment, this is the obvious place for it to bounce. And even though it's started to bounce now, this is a monthly chart. It did take 4 months for it to actually bounce. I don't expect we're going to be seeing anything like that. If we go down to the 4 hourly, we can see that we're being rejected from this zone here. The MACD is it's struggling to get above the 50 exponential moving average, above 91. But if it did get above 91, I probably would expect a rally. To be honest, maybe even up to 92, which doesn't sound a great deal, but that would impact on Bitcoin a massive amount. Anyway, I appreciate this video has gone on quite long enough. So what I would say is, if you want to join my Telegram chat, the links are below. I've also got links for loads of other things down there that you might find beneficial. You can set yourself a new Binance account up. You get 20% off all your fees, and you can have multiple Binance accounts. If you're already thinking, I've got a Binance account, why do I need another one? You can set another one up, no problem. They don't care about that. You just need another email, a Google authentication code, and then suddenly you've got 20% off all your trades for life. I've got links for a lot of other things down below, so just have a little look around, and they're all very beneficial. They're all got decent offers attached to them. But other than that, I hope you have a nice day, and I'd hope to see you in the Telegram. Take it easy.